Guys, so yesterday I missed this trade. So I missed this trade yesterday. Yeah, I'll show you where the price got to and then what happened to me, and the moment I woke up where price was at. So it could have been a very easy win. So yesterday, my trading strategy is quite simple. Don't stress yourself. I'm just going to go through the trading strategy and then we are going to go into it. So my trading strategy is very simple. Look at the trend of the market. So you are trading on the 15 minutes time frame, right? So on the 15 minutes time frame, look at the trend of the market. So clearly you are seeing that the market is printing lower lows, lower highs, and that's pure market structure. Lower low, lower high, lower low, lower high, lower low, lower high. So clearly the market is in a downtrend. That is all you need. So my strategy is this: if the market prints a lower low and then goes up to print a lower high, right? Usually the market will come back because it is in a downtrend. The lows will be broken, so the market will now come back and print another low that will go lower than the previous low, and that is what we call break of structure. So my strategy is that whenever there is a break of structure, the market prints a supply region. In this case, in a downtrend, whenever there is a break of structure, the market will always create a supply region where the market will come back to, and then it will retrace to go break another structure. So it's very simple. So this low was printed, this high came through. Now this high came through and then broke this low at this level, right? It broke this low at this level, or let's say it broke this low, it came down here. So here was the new low. Now as the new low has been printed, or as I'm saying, as the new low gets printed, what you do is that you mark out an area where you know as your supply area. And what is your supply area? A supply area is simply the last green. This time we are in a downtrend, so it will simply be the last bullish candle that caused the break of the low. So the last bullish candle that printed, or simply the last bullish candle that printed large red candles. So here you see, this candle is supposed to be red, but I personally I've just changed the colors and I've made it black. So if you see black, originally is just a red candle, right? So the last bullish candle, this candle, right? This candle was the last bullish candle that was printed before we saw this large red candle that came down to break this. So here is my supply region. But then in trading, market will not always come into your supply region. There will be a lot of supply regions, but mark out every single supply region. Market will obviously come to one. So when this structure was broken, you mark out this area. So after I marked out this area, I was expecting market to come back there. Market decided, no, I will not come. What happened? It went further to break this low. So once it is breaking a low, you'll just be marking out your supply regions. So it went further to break this low by printing this large red candle and then broke this low. Okay, so once this low is broken, I know that I'm looking for a new supply region. And what was the new supply region? Basically this one. So this was the last bullish candle that closed before we got this big red candle. So here I mark all of this candle, the bullish candle, as my supply region. So basically what I was waiting for was for price to approach the supply region. Price could have decided to still continuously break the low, and then I would have also continued to mark my supply region. Very simple. So I was waiting for price to approach here because I knew that this is my supply region, and once we are in a downtrend, price will always retrace into the supply region and continuously be in a downtrend. So what happened? Let's see. Yesterday, I think it was around 10 o'clock in the evening. I was extremely tired, I'm not going to lie. So I was tracing this particular trade 10 o'clock in the evening. I was tired. I was like, let me just go, let me just rest, let me relax more. Price was approaching. I knew price was coming here. So basically what I'll do is that when price comes here, right, I'll go into a lower time frame and then expect certain things. Once I see those things, I'll just take my trade. That's how I take my trade. If you watch all of my videos, you realize that that's how I take my trade. So I was expecting price to approach here, and it got here, and I was like, oh, let me just go rest more. I was tired. I was sleeping. I went to sleep. I woke up and I realized that price had gotten here, and I couldn't take the trade because then, if I was awake, clearly, what I would have done was this, right? If I was awake, what I would have done clearly was this. So when price had the first reaction here and then printed this second candle, all I would have done was to mark these two candles. Okay, mark these two candles, and then let me just show you. All I would have done was to mark these two candles, and then once I've marked these two candles, I'll go into the 1 hour time frame and I'll look out for a head and shoulder pattern. And I've told you that with Bitcoin, whenever market wants to come down, it will most often 70 or 80% of the time form a head and shoulder pattern. So clearly, head and shoulders, right? So on the 1 minute, just by using my eye and watching over here, I knew that the market had formed a head and shoulder. Okay, but then if you don't know anything about chart patterns but you know market structure, basically you can use market structure to take this trade. So you realize that on the 1 minute, it was higher high, higher low, higher high, higher low, right? Higher high, and then this higher low got broken. So immediately I see that this higher low, right, is broken. This on the 1 minute time frame, immediately I see that this higher low got broken. Okay, as a candle printed beneath this candle printed beneath this higher low, all I would have done was to take the trade, and that's how I take my trades. All I would have done was to take the trade and then set the stop loss over here, and I would have gone for an easy 1 to 2 risk to reward. An easy 1 to 2 risk to reward. I don't want to be greedy, right? Just simple 1 to 2 risk to reward. Simple 1 to 2 risk to reward here. Simple 1 to 2 risk to reward, and then I would have won the trade as I woke up. So I mean, as I'm telling you, the time I got up, the trade was almost here. Okay, I got up. It was Saturday. I was getting up on Sunday, preparing for church, and I realized the trade was here. I was like, damn, I missed the trade. So this could have been the trade, very simple win. But then, I mean, no worries. It currently looks like, so you see, the market here did not close beneath. It has not broken the low. The market here did not close beneath this low. So we can't say we are waiting for the market to approach a supply region. Unless the market breaks a low, that one we would have plotted a new supply region and we'll be waiting for the market to approach. So basically, it looks like the market wants to change trend. That's what it looks like, because I've seen other altcoins where the market is sort of changing trend. So basically, it looks like the market wants to change trend from a downtrend. I think we've been in a downtrend for a while now. So it looks like Bitcoin wants to change trend from a downtrend to an uptrend, right? So once we know this strategy, we are not worried. We are not worried. Anything can happen. We can miss a trade. But since we know the strategy and we are using the strategy and it's working out for us, we know that whenever there is a trade, we just use the same strategy and there is a likelihood that we are going to win, right? So all you need to stay profitable is to win 4 out of 10 trades if you use this strategy. And let me explain. So imagine you are risking $100 on every single trade. Now with this strategy, we are going for a simple 1 to 2. And so if you risk $100 on a trade and then you win the trade, you are going to make $200. Now out of 10 trades, right? Out of 10 trades, if you win 4, it simply means you've won $800, right? Because you are risking $100 on a single trade. So if you win 4 out of 10, you've made $800, right? If you lose the rest of the 6, you've lost $600. So you've made $800 and then you've lost $600. So you are left with a profit of $200. So you are still profitable. So all you need to be profitable is to win 4 out of 10 trades. And with this strategy, I kid you not, if you are able to use this strategy well, listen, if you're able to use this strategy well, I kid you not, you can take 10 trades and you win all the 10. If you are able to use this strategy well, you can take 10 trades and you win all the 10. I'm not kidding. You can try it out and then you see what I'm saying. So basically this was the trade I missed, but I'm waiting. So since this area, right, since this area was our supply region, okay, now what we are waiting for is for price to, it looks like price wants to come here and break the region. So what we'll be looking for is for price to break this region. So once price breaks this region, then it simply tells you that now supply regions are useless. Now I'll not be taking trades in the supply regions. I'll now be looking forward to the demand regions, right? So basically that's it. So in a downtrend, you look out for supply regions. In an uptrend, you look out for a demand region. So basically that's it. And then you go for a simple 1 to 2 risk to reward. You are good to go. No stress. Share your thoughts in the comment box. Thank you.